So I got my libation to keep me hydrated.
I'm drinking, I'm not going to say the name because they're not a sponsor. Okay. But y'all know what that is.
Wait, what? I didn't see it. Oh.
Guess what it is.
The one that everybody struggles to pronounce.
Yes.
Everybody has a way of saying it.
Yes. I like the way my, he doesn't work there anymore, but my guy at the store across the street, I like how he says it.
Wait, what does he say?
He calls it, what does he call it? He calls it, I don't want to say, he calls it Le Cray Cray.
Wow.
You got your Le Cray Cray? I was like, yeah.
Wow. Fresh, you know that when you open a bottle and you get that fresh snap?
Mm-hmm. Hey, Karen. Who else do you got here?
Today we about to get straight up.
Donna, what's up, girl? How you doing?
Yes, I'm pretty excited for today.
Let me put this on this side. Gadgets.
So that's live on my page. If you're joining us, feel free to definitely join it, share the live, because someone that you may know or people that you may know in your network, they definitely need to hear this today. Last week was fire though, I will say. Last week was, whew, we were coming in hot with the interview, I think last Tuesday, along with, that's my wife in the background.
That's funny. Okay, I shared it. And I'm looking on here. Hey, Lakeisha, girl, how you doing? From the STL, how you doing, girl? Who else we got up in here? Okay, I did share the stream.
Yeah, I share the stream also. So we're just gonna give people some time because some folks may be going through that moment where they're getting ready to be calling it a day at the office.
Yeah, so we were talking about moving the time possibly.
Yeah.
The 5. What do y'all think about that?
Yeah, I think 5 o'clock or 5:15 is a good starting point. So that way it gives you that 15 minutes to just debrief with yourself after you come off of the job.
Yeah. I mean, I'm fine with it. Yeah, I could make it work.
What are you up to?
Hi, Akram.
Living my best life, and also, you know, for today.
Shout out to Kamari, right? What's so funny?
Nothing. Just there's a lot going on. There's a lot going on here at the house. Like my wife is in a meeting, and I mean, I guess she's having the time of her life in this meeting. So if you hear her laughing, I mean, there it is.
Laughter is good for us.
Steve, who does a lot of the video shooting, I think he's pretty much getting ready to call it a day because he's hit that hump. But so I can hear him breathing. Butter is just staring at me.
Okay, I see his little. I think I saw his head or something.
No, he's on the couch.
Oh, then what did I just saw something. I don't know what it was. Hey, Randy.
That's Steve. He's literally laying on the floor because
Butter
picked him off the couch.
That's funny. Shout out to Akram, or is it Akram? Just let me know. They like your shirt.
Oh, yes. National Sarcasm Society. As if we need your support.
Shout out to Randy King in the building. Her portfolio is litty.
Yes.
Super lit. I've been watching you, girl, and I see what you're doing now.
I'm watching from afar. I am definitely watching from afar. And let's see here. Yeah, I got a lot to get off my chest this week. That's the reason why I kind of like came prepared with this T-shirt. So
Uh-oh. Shots are fired.
it's definitely going down today. So what's up, Ranny? So we're just gonna give people a few more minutes, and then I guess we're gonna let you take it away, Jolene.
All right.
I mean, is there anything that by the way, if there's anything that people, I need a come up theme song. Actually, we're in the process of working on an intro video for the series, for one of the series.
Totally. Hey, Rodney.
What's up, Rodney Brooks? I went to Tuskegee with Mr. Rodney Brooks, one of the most upstanding people that I know to this day. And he's a hell of a cook, y'all. All the way down there in Atlanta, Georgia. What's up, brother?
Hey, y'all, everyone in the comments, shout out where you're watching from.
Yes.
What city or country, depending on who's in the mix here today. Uh-oh. About to write a rap.
I don't know who's going to do it because...
That's funny. I look forward to that, Kamari.
That should be interesting.
Randy, what's your percentage? What's your total increase now? We got Atlanta in the building. I know SCL.
We got St. Louis in the building. That's what I'm talking about.
Candace? You know Lakeisha is Kamari's sister.
I figured as such with the last name and all, but
okay.
I ain't trying to give away people's monikers and everything else. I want them to go by their artistic names, but shout outs to Lakeisha. Welcome, welcome, welcome.
Speaking of such, I always forget to rename.
Candace Connor in the building, ladies and gentlemen.
Hey, Candace girl, how you doing?
Wait, you're not getting notifications for when we're on? Or you follow the come up, so you should be. If you're following us, you should definitely get the notifications. But if not, I also post the videos on my own personal page, so we'll definitely work on that. Oh, you're up 7.8%. I came down today. Yeah, I mean, we're gonna talk about that a little bit, so don't worry. Don't worry.
Yeah, Randy, you're in the long term. You're good.
Ooh.
Arizona, what are you talking about, girl? What are you talking about? There's
like, is that for real?
Girl, she's too much.
All right. Let me know when y'all ready. I'm pretty locked and loaded today, so hold up. I'm gonna set these lights so that way everybody can get
your full glow.
Yeah.
All right.
Forget about those spring blossoms. We're going mountain breeze.
Okay. All right.
All right.
I see. Wait, what did you say, Kamari? You said me too?
Yeah, I think to Randy Kang, I think the market being down today. It was quite an interesting ride.
Randy is ready. I'm ready. Randy's ready.
If everybody's ready, then let's get it popping. Let's talk money, because that's why we all here. So take it away, Jolene. Where should we start?
Yo, everyone, welcome back to another episode of Trade Talk Tuesday with me, Jolene GC, and Mark Monroe. So man, this is episode 7, Mark.
Yes.
Can you believe it?
Live. We've done 7 lives.
Well, technically 8 if you count the very first one. But we number that as 0. But you know.
Pilot.
Yeah, that was the pilot one.
Like a Kardashian test a pop-up shop.
But wow, we have covered so much. We've covered how to pick a winning stock.
Mm-hmm.
We talked about options, which that math, I like that math on options. That's what's
beautiful, isn't it?
Beautiful. We did some chart analysis, which I know, shout out to Kamara, she loves a good chart. But you know, I really would like to know what is happening, what's going on, what went on today. You know, like there's a lot of different things that we can touch upon that went on today.
Yeah.
Definitely want to get into some charts if time permits. And really, I want to know, what are we looking at for the road ahead? Like, what is going on? How should we be thinking? Are we thinking short term? Are we pivoting? Like, what are we doing? What's our
I'll
plan?
definitely put on the Nostradamus hat, or I should say Negro-damus. I'll definitely put that on there. I'll definitely try to wear that very proudly and to be able to. I don't have a crystal ball, but I got water, so I'll look through the reflection and tell you guys what the future is. Like, we now have this thing where it's like, I guess everybody now makes sure that I have something to drink, because last time or a few times before I was pretty parched. So
drink up, gulp, gulp.
make sure that if you're with us, just go ahead and just send us a cheers. And if it's wine, then, have fun. If it's not, then, you're joining us.
Oh, and then also while you're in the comments, y'all, hey, shout out to Marcus Roberts and Edward Lynn. Hey, y'all.
Hey.
Also, if you're in the comments, let us know what trades you're looking at, what potential trades, what trade you made today, if any. And also, we need an informal poll of who actually is in the market. I want to know who's on the sidelines and who's in the market.
Yeah.
So put it in the comments.
Yeah, because definitely want to know, like, okay, hey, if you're in the market, then kudos. And, if you need help, I mean, that's why we're here. I'm here to give you guys advice, or, just from my perspective, of course. Not a certified financial planner, nor do I ever want to be. So just want to give you guys nothing but the real, and give you guys some fundamentals in the process, so that way you guys can set yourselves up to win. That's my ultimate goal. But yeah, if you're not in the market, please also tell us, what's the reason why, what is it that we can help you guys do to pull the trigger and get yourself out there, so that way you can start, making that future a little bit more brighter in comparison to just saying that it's just a dream that's just so far away. So for sure.
About that action, boss. Yeah. Question from, just put this in the mix, but Farazana, she wants to know, are we talking about gold today?
Are we talking about gold? I mean, if you want to, we could talk about gold. I could talk about it very quickly. I mean, for those of you guys that really want to know, like, what's the purpose of gold, it's just like pretty much like a commodity, or some folks consider it as an asset. I kind of look at it. The reason why I don't really get too hype about gold is because it sits within a range, especially when we find ourselves in quote unquote recession-like markets. And then that's where they flock to things in which that they consider are defensive, where they can make some money, and that's where they consider gold as one of those items. Another thing that they typically do is they'll go to, say, for example, things in which that should be doing well in the midst of certain specific recessions. So like, for example, sorry to go stock route, but if you're in the midst of a recession, you still gotta, wipe your behind and brush your teeth. So Procter Gamble is one of those companies that, over a period of time, when you're in the midst of a recession market, they tend to do pretty well. Gold tends to do those same things. It's pretty defensive, but then when the market climbs back, then pretty much people forget about gold. So it's kind of like this seesaw where it's just money flows in, money flows out. I don't really see that as something in which that you can really quote, unless you buy it at a bottom at a ridiculously low price when it's at pretty much the lows. Will you ever really see a return? And then by then you have to wait for a significant amount of time. So that's the reason why I don't really see gold as really as a valuable play for me personally. But for other folks in whom which that they want to invest in gold, I mean, power to you.
Marcus said that he is in the market currently, but cautious with cash on the sidelines.
Oh man, that's interesting. Well, in this market, you should, of course, like with any investment, be cautious, but there are tons of winners out there in which that you can pick that are just waiting to just go like just bananas as we move towards from the middle part to the second half of the year that you can position yourself for. I mean, if you see companies now that are at pretty much anywhere from 0 to roughly 1-2%, you could possibly be seeing them at up 10 to 15% by the time that the year is out. Of course, depending on how well the company does. But typically, from what we've gathered and from what I forecasted, is that we should see pretty much a nice little rebound come the second part of the year. Of course, the only cautionary part that I put in there is the election, which we'll talk, on a different episode. That's coming later, but
Yeah, stay tuned for that. Okay, so let's back up a bit. Let's talk about what happened in the market. What was going on today? Who were some of the market movers? And we know, if tech is down, the market kind of, takes a little nap. So let's talk about that, and then talk about what we're doing moving forward.
So pretty much what you saw today, and I like to preface it first by, when you think about money, or when you think about liquidity in the market, you think about it like, imagine water. Hold on for one hot second.
Okay, so Mark is gone, y'all. Doing I don't know what. Fares on you said F5 network seems like a good buy. Okay.
So
Take a look at that later.
So I'll say, you got to look at it in the sense of, water. That's ultimately when I'm thinking about liquidity in the market, I'm thinking about water, right? So when you think about a pitcher glass of water, and let's take a cup, you pour the water from the pitcher into the cup. Is the water lost?
No.
It just flows from one source to the other, right?
Right.
And so we see the same thing that's taking place in the market now. So for example, tech has had a very amazing run from the bottom to where it is now. And it's not to say that people are not going to be in tech, they're not going to be in tech moving forward. But what you're seeing is there's a lot of folks out there that literally sold off in positions of your airlines, your Royal Caribbeans, your financials, your banks. I mean, if you go and look at, say, for example, who was the winner today of why the Dow was up almost 600 points to close, it was literally them. They won big today. And that was because of the fact that you saw a lot of that money funneling outside of the natural winners that have been pretty much carrying us through this entire time. You saw a lot of that money funnel out of things like tech, bio, pharmaceuticals. Energy never really was a major play, but you saw it move from those major sources that have moved the market, and then you saw them funnel into other sources like industrials, financials, travel companies, some retail. And that's only because of the fact that naturally people are thinking that when COVID-19 restrictions have lifted, then these companies should really bounce back significantly as economies reopen, which is it's expected, it's true. But at the same time, I see this as something that's essentially temporary.
Can we look at a chart
Of course we can.
today and see what that S&P 500 was looking like as you were describing?
Well, I think the S&P wasn't S&P 500 still up for the day?
S&P 500?
Yeah, didn't it not close positive for the day?
Let's look at the chart.
All right, so we are looking at the chart. I'll pull up the SPY because that's a good spider. It's the ETF.
Mm-hmm.
And so it pretty much tracks as the S&P 500. Can everybody see this? I think they can. Yes, they should be able to see.
All three major indexes were up today.
Yeah, so I remember, I think the S&P 500 essentially closed, what was it? Were they up by 36 points or something like that?
36.32, yep.
Yeah, so here's a good rule of thumb to cheat. Also, by the way, if you're looking at the SPY ETF, you notice how you see it says 3.64. If you move the decimal point, then it's really 36 points.
Oh, got you. So it really dropped then.
Yeah. All right, and so if you look at, say, for example, today's trading, so this is today, we started out, if anybody was watching the futures market, we saw that we were up Like we already knew that the Dow was going to be up 500 points long before the market had opened, and the Nasdaq was actually supposed to be up by 100 and I think 180 points, 190 points, and then we just saw pretty much like investors just divesting. We just
Now for the bottom line, everyone, that's for those that don't know, that's the time, it's hour by hour.
yeah, these are
So
the major time periods by hour, and then of course they never really show the last hour because that's when the market closes. Just like they never show when it opens, which is at 9. It's really 9:30, and then it closes at 4 p.m. Eastern time.
this is the NASDAQ, okay.
Yeah, so this is the Nasdaq. So if we want to, we could pull up. Let's say, for example, let's look at a company like Amazon, right? Amazon, which has been major throughout this entire time period. So that way everybody can see over the last 6 months, Amazon has been literally killing it over the last 6 months. If we go even further, over the last 3 months, I mean, since we had some issues, really Amazon was already down during that time period. When, say, for example, your other companies during the same time period, they fell. So Amazon was already underperforming, and now it's become one of the better performers so far year to date. But then if we look at, say, for example, a JP Morgan, right? JP Morgan has been underperforming this entire time. Financials have been significantly underperforming. So if we look at its activity today, I mean, it just tells you the tale of the tape, which is completely reversed from, let's say, just keep this mental snapshot in your head of just JP Morgan just rising throughout the day. And then when we look at, say, for example, let's look at Apple. It's just a tale of two totally different tapes.
Mm-hmm.
So as one pretty much started low and ended up higher, they went the complete opposite way for the day.
Yeah, when tech and finance really, are up, then we can see some serious gains in the market.
Yeah.
When they diverge, it's so annoying.
Well, I mean, like I said, these things are typically temporarily. They're very temporary. So, which means that they're not going to last forever. It's just literally a. It's just literally a. I mean, pretty much you just see the liquidity just change hands. So for now, what you're going to see is you're going to see other folks that are going to try to chase this trend, and it could potentially burn them in the future because they're going to be chasing on to, say, for example, these trades of, hey, I'm going to go ahead and buy into JP Morgan, or hey, I'm going to buy into Royal Caribbean, or hey, I'm going to buy into, like, let's see, for example, let's look at Expedia. So if we look at Expedia, Expedia was up today. So when we look at that, I mean, but then let's look at the last 6 months. The question is like, do we think that the airline industry is just going to rebound like that this year?
No, I don't.
I don't think so. But you have people out there that are literally believing that it's actually going to happen. So pretty much they're just chasing a phantom. Or they could just be saying, hey, that since it's so low, I mean, it's at $82, whereas in comparison it was trading at 124. They could be just positioning themselves for, next year, which is supposed to be a major rebound for a lot of these companies that are able to survive. Many of them are going to literally have a significant rebound, and at that point, that looks like a very good deal.
So, I mean, as far as like investor perspective or trading perspective, is it something where we're just considering like, okay, for this year we're going to see what deals we can get, but the real action, or as far as rebounding goes, look for 2021 or even further out to maybe 2022?
I mean, 2021 is really going to be the battleground for everything. I mean, keep in mind, taking into consideration that you're going to be coming right off of a presidential election. You're going to be coming off of, say, for example, like, things in which that we lost over 30 million jobs this year. So you're going to be seeing a lot of companies trying to make that rebound. You're going to see, the consumer confidence come back. So you're going to see a lot of things really make their bounce back next year. This year is just really like kind of like a flat to like very low performance. Nobody is expecting any of these companies to outperform at their typical 20% year over year return in the stock. They're not expecting any of that. I mean, unless of course you're within the tech space, and that's a totally different ballgame because they're just winning regardless. But for the most part, I mean, this year is kind of like a wash or pretty much a race to break even.
So Farazana here in the comments, she's looking at F5 networks. Can we take a look at
Sure.
for F5 and see whether or not it's a good buy?
So F5 networks, I mean, they pretty much have been doing pretty well. I mean, of course, given them where they're at, they can allow, I mean, pretty much the people can use their services from stay at home as well as their employees. So they're not really taking any hits in their operating expenses. Notice if we look at over the last 3 months, I mean, they've been on that kind of like that same tear as the rest of tech. They're following on that same wavelength. I mean, I think at where I'm looking at with F5 networks, I think that they're still going to do very, very well this year. They're going to do very, very well.
Is this a time to buy?
Looking at the stock right now, we are seeing some, like their last high was about 149. They're trading $10 below. I mean, if you're trying to buy it for the $10 bump, I mean, I think that they're probably, when it's all said and done, it's probably going to reach about maybe 155. But keep in mind, we can't really say that yet until the stock is corrected. We're still kind of like, we're still in it. There's still a lot to learn about this right now. For example, if we're looking at the performance, I would definitely say it's a buy if you're looking to hold on to it long term. If you're looking to play it in the short term, I would say no.
Right,
that would definitely be a no for me. But I mean, here's this 5-year chart, by the way. So that's the reason why I said if you're looking at it long term, there's a lot of long term run room. But and its last upside was back in 2018. So yeah.
Okay. I'm just looking at the comments here. Farazana says the CEO is hella nice.
Yeah, I mean, it's a good company. It's a great place to, from what I hear, it's a great place to work at. I mean, but that has nothing to do with, say, for example, the reflection of the stock. What reflects the stock is, say, for example, are they getting in enough business?
Your boy Marcus, he says he's looking at TDOC as a good play as economy opens, but is a bit expensive or overvalued as many companies in S&P. What are your thoughts?
I definitely believe that companies like Teladoc and Zoom are overvalued companies. I mean, I think that what Teladoc is doing is great, but at the same token, there's going to be many other players that are going to be doing the same thing. We already heard that Microsoft Teams is pretty much in the space where they're moving into, where I think they can give like X-rays via like video chat now through Microsoft Teams. They can share information. I think that given that it was a stay-at-home stock, and then when people are no longer staying at home, I think that kind of defeats the whole purpose. And you're starting to see that like Teladoc and companies like Zoom, though I've hammered it very much a lot so far. Looking at Zoom and Teladoc, you're starting to see that a lot of companies are starting to come off of those positions because of the fact that pretty much America's going back to work, and that's the focus, to get people to be back in those offices.
So I was looking at
yeah.
So I was on my CNBC app. Oh, here's the Zoom chart. Okay.
Yeah. So if we're looking at Zoom's like last month of performance, it's now headed towards a downward trend back from its highs, which it pinged a high up here at 174. It pinged it again at around 175, and then since then it's kind of like floated back down here. So this is like kind of like a make or break area for Zoom. I mean, and it's kind of like a make or break moment for the United States economy as well. So this can really determine everything. So if we find ourselves like, I mean, and from what we're hearing about, like, you know, states opening up, but yet people are that we're starting to see coronavirus or COVID-19 cases start to increase. I mean, it's a toss up, but I still think that like companies like Zoom and Teladoc, they're just overvalued.
So, as I was saying earlier, hold that thought for Zana. As I was saying earlier, I was looking at my CNBC app, and I noticed when I was looking on the markets tab, I noticed the COVID-19 index, which I like never really paid attention to it before.
Yeah.
And I'm just looking at it, and it looks like it's, you know, kind of like biotech companies and companies in health. I see Johnson and Johnson in there.
Yeah, so it's tracking all the companies that play a major role in COVID-19, whether it's like the find for the vaccine or treatments or suppliers, because they won pretty big early on. But now you're starting to see, like, especially when you think of hedge funds, I mean, they've made their profits. So now they're just like, okay, hey, now we're moving on. Now our focus is elsewhere.
So earlier you're talking about the liquidity and how the money moves into the market. So
yeah,
we saw a sell-off in like consumer discretionary,
yep,
and some other areas. So where's the money going, like say for the next, I don't know, maybe this next quarter, especially with like summer coming?
Well, it's predicated based upon what's going to happen in the economy. So if we find that more people are starting to fly, then it's going to go definitely towards airlines, which they definitely need to come up. It's going to go toward, right? Zing. It's definitely going to go to places like for example, restaurants. It's going to go to places like industrials, because as construction picks up, then so too they, like your 3Ms, your Caterpillars. So those, I mean, any place that was losing because of COVID-19 is going to be rebound time for them. Now the question is there enough investors out there in the market to believe that, okay, this is worth investing in?
So we'll just be playing that game, because I'm sure, like, as things are reopening, and well, things have been reopening, and cases have been increasing in certain areas where maybe it wasn't as prevalent before. Sometimes it seems like the market, like, they don't care. Like, it's like we just are holding on to the hope of the vaccine, and we want, things to quote unquote return to normal, which is not going to happen. But so sometimes it's hard to kind of ascertain like what the overall sentiment is when you have a few investors just trying to get in where they fit in, so to speak.
Yeah. I mean, like I said, it's like this is like at a point where we've reached an inflection point. Like, for example, especially for tech, I mean, we just saw that, like, in the same day, like, which is kind of weird, in the same day we saw liquidity move from one source to another. So you saw a lot of money funnel out of tech, and though that tech, pretty much weathered it very well, we just saw a lot of volume move. But at the same time, a lot of these companies that were doing well, like within the tech space, they're now hitting their resistance points, because they're at, like, they're pretty much within the territory of their highs. Now, here's where the scenarios could play out. Tech keeps running. I mean, I don't know a single hedge fund out there that still doesn't want to put their money towards tech, consumer discretionary, communications sectors. So that can mean that pretty much you'll find that we could possibly blast off from here. and go to significantly new highs in tech. And that is very much so possible.
Mm-hmm. That'd be lovely.
Or, you know, since tech has already started to recover, you could see tech still end up a little bit flat by the end of the year and then take off next year. Because there's honestly, by that time, there's really nothing stopping tech. All the bad news is pretty much baked in.
Okay, so that's good for the road ahead.
Sure.
Now we know that that the unemployment numbers are kind of an indicator from the past that indicates from the past. So I don't know, I'm thinking about like July and with the reopening and how unemployment numbers are going to or may impact the
Are you
market.
thinking about June, you mean?
No, I'm more like July. I'm thinking about July because I feel like with June, we still have economies and states and all that are opening like in these phases. So it's not like full on opening. So it's not going to be like a whole flood of jobs. But
hey, you got people out there having pool parties in the Ozarks. So
I saw that. And we were hella close. And there was a sign that said social distancing, please. 6 feet.
I didn't, just for the record, I didn't see not one single Black person in that video. Though it was interesting because then they showed a pool party in Atlanta and there was nobody in the pool. But
hilarious. I didn't see that. That's funny.
But yeah, I mean, July is definitely going to be a make or break month for the economy for sure. Because especially for airlines, if there is no rebound for airlines by July, then like I said, you thought the financial bailout was bad. Like you're talking about pretty much transportation around the board. You're talking about like cruise ships. You're talking about airlines. You're talking about, hey, even parts of the auto industry. You know, it could be a significant wrecking ball. And for anybody who owns Boeing stock, I mean, you're gonna have a bad day. So, ouch. You're gonna have a very, very bad day. So, how
much should we be
say that? Yeah, July is definitely going to be that month.
How much should we be paying attention to, like CEO commentary, for example?
I always look at like any interviews that I see. I always look at it and ask myself, what is it that they're not telling me? I always look at a CEO as like a great magician. You know, wherever they point their hand, that's where pretty much the rest of the world really focuses their attention. But the real magic for any magician takes place where they're not having their hands pointing to. So I look at CEOs in the same manner. And so I think that they're definitely going to try to do their best spin as it pertains to, you know, telling people, hey, that we're doing all right, we're roaring, or we're in the process of doing XYZ and getting better. I mean, the proof is really going to be in the pudding when we really start to see, okay, hey, well, you know, what are the results? I mean, you can't fake an earnings report unless you're lucking coffee, but
don't want to do that.
So, I mean, that's going to be the real telltale of, you know, how well companies are really doing.
But do you think that, you know, like your boy will, you know, tweet something and then it has impacted the
market? When we say my boy, you mean Elon, right?
No, that's not what I'm talking about.
Oh, well, I don't know who else you're talking about.
Okay, you can play coy, but when old boy tweets, you know, it can have impacts in the market. Do you think that CEO commentary has that same ability?
Well, I mean, like I said, we're talking about my boy Elon Musk. Then yeah, when he tweets, he definitely sends shockwaves. But if we're talking about somebody else's friend that, you know, kind of like has that like spray tan that sits in the White House right now, then yeah, I mean, like currently right now we're having this beef and battle with China right now. And we've kind of been down this road before. And I think that's one of the reasons why the market isn't really like kind of like budging on this one, because they're like, okay, you played this hard stance before, and it's like, okay, well, it didn't really do anything except like put a lot of farmers, in bankruptcy. Um, but the biggest worry, though, I would say from that is what China is doing with Hong Kong. That could send major shockwaves, and you're already starting to see it. You're starting to see that a lot of companies are not doing business in China. They're moving their business and their logistics out of China.
Mm. So that's definitely something that we gotta.
So I'd say that beyond a tweet, I mean, I would say, from any CEO or any person, I mean, that's what's really going to really shape and move markets is, what does supply chain and logistics look like moving forward?
Mm-hmm. Okay.
Because we're already starting to see, especially if you're talking about tech companies, a lot of tech companies are moving their businesses to their supply chain and business to places like India, Vietnam, Thailand.
Mm-hmm.
They're leaving China. Though it's going to be interesting to see exactly what happens coming forward in the next coming years of what takes place in Africa. I think Africa is going to be the next battleground.
Well, I'm excited for that because you already know I'm trying to.
Yeah.
Ghana a second home at some point.
Yeah.
Y'all, what you guys are pretty quiet in there. Farazana has hella questions. She asked,
"Oh, come with it.
Are there any good pre-IPOs out there that she should be aware of?"
I mean, outside of Airbnb, which is like what the market is definitely waiting for, and I don't know what that's going to look like given, COVID-19. I mean, I think a lot of pre-IPOs out there are definitely going to have to go back and rethink things.
Mm-hmm.
Yeah, it's kind of like the IPO market right now is looking a little soft, given in the sense of, a lot of their balance sheets got rocked thanks to COVID-19.
Mm-hmm.
And it's going to be really interesting to see who's still going to go IPO, over throughout this year and going into next year. But I don't think that I think the scheduling has definitely significantly changed. You're going to see a lot of the companies, and if they are going IPO, they're going to go IPO for a lot less than what they were slated to go IPO for.
No doubt. So, okay, well, as far as tomorrow goes, was there any company that you were looking at for
any trades
tomorrow? Yeah.
Yeah, I'm definitely looking at AMD right now because AMD's been going through a beautiful little correction right now from it. But I think that where I'm seeing AMD at, AMD can march all the way up to 100.
When?
I think that we could be possibly seeing AMD make a march up to close to 100 probably within the next year.
Can you pull up the AMD chart?
Of course. I mean, I've been tracking this pretty well. I mean, that's just a 1 month chart. But if we're looking at, say, for example, if we're looking at the 6 month or a year, which is the best way to look at it, I mean, the next blowout is 60. I mean, there's nothing really stopping AMD after that.
Wait, go back to that little peak.
At 60.
That one.
This one?
No. You were at it the first time.
Oh.
I was trying to see what that was. Okay.
58.90.
Okay.
So yeah, I mean, there's nothing stopping AMD, and I think that what AMD is doing, I think that where they're going, yeah, the future is very bright for them, especially if they can pull off, well, it's not going to be on them, but if Microsoft and PS5 can definitely pull off what they're going to do for Xbox and PS5 during the holiday season, there's nothing stopping AMD. There's nothing stopping this company.
So are you or maybe it's both? Is it stock and options?
It's both. I mean, I'm definitely going to be re-upping on my position in AMD stock for sure. Like, especially given that I did earlier today, bought some more. But then also I'm looking at a potential 2-year option trade on AMD.
Okay. You hear that, Kamari? And then Marcus Roberts, he's like, you think we'll dip below 3K again or going up from here?
I'm guessing that you're saying from the S&P 500.
Mm-hmm.
It's possible. I mean, we definitely can have a correction. I mean, corrections, you never really see them coming, but I mean, it's yeah, I can definitely see a correction coming. Especially since we're going to have a lot of stocks sitting at their 52-week highs. So we probably may see that at the next earnings.
Mm-hmm.
But I mean, the beautiful thing about corrections is if you're in long-term positions, it doesn't really matter. I mean, you just pretty much march on from there.
And stay the course is what
Yeah.
you say. Stay the course.
Now, if you're doing short-term positions or anything like that, then that's just an ultimate no-no.
Well, I have a short-term position on ARKK.
Oh, ARC? Oh, interesting.
I do. Okay, so Kamari's cracking up over there.
I would also tell people to pay attention to the XLC and Google. XLC, Google, Facebook. I mean, Netflix is in correction mode right now, so I think that that's going to definitely roar back because much of the awards that we know this year are going to run through streaming companies, not through theaters.
Mm-hmm.
So anybody who gets the Oscar this year is going to have to run through Netflix. I think the only reason why you see Netflix down today was because HBO Max. I mean, you know, of course, investors are like, hey, let's put some of our attention there. But I think that technically, in my opinion, I think that Netflix's catalog is way better, and also what their reach is right now, I think is better.
183 million.
Huh?
183 million.
Yeah, in comparison to, say, for example, HBO's best show, which was Game of Thrones, I think it only grossed like per episode. I think it was just like, what was it, like 40 million or something like that?
I don't even know.
So I would say watch the communication sector. I mean, especially where we're at right now, given that you see Facebook down, though that it's at 52-week highs. But Google is a sleeper, and here's the reason why it's a sleeper. If you're looking at it, I think that if you're looking at it, you've got a lot of run room there for Google. That is a beautiful chart for Google.
Say more.
I mean, we don't know what Google has up its sleeve. Two, I think that Google is definitely going to show out when it comes to ad revenue. I think it needs to turn on some of its monetization from its other services. I think that, I mean, pretty much the value add is already there given in its cloud services. And now they just need to improve their cloud gaming service.
Marcus wants to know how much in percentages is a correction for big stocks like Netflix versus a screaming deal?
Doesn't, so it's in big stocks, small stocks, it doesn't matter. It's pretty much it's roughly 10% or 10 to 15% off its 52-week high or from its highs. Another thing to look at is Another thing to look at is that you can go immediately from correction territory, which is down 10 to 15%, to bear market territory, which is 20%.
So you got that, Marcus? Shout out to friend Chanel Powell's watching.
Hey.
And shout out Shavon she's watching, as well as Jade Solomon Curtis. Hey y'all.
Nice. Welcome to the party. Welcome to the Cool Kids Club, y'all.
Chanel actually is going to be a guest on the show.
Love to have you on board. I know that we went back and forth between that Zoom and Facebook thing and Microsoft, but yeah, you bring a lot of great perspectives,
Chanel.
Yeah, we gotta like, yo, I love it. I love it when a person comes in with a fresh new perspective. So yeah, definitely bring her to the show. She brings a lot of fresh ideas and understanding. And if you want to be a part of the show, and if you want to come and sit down and talk to us about like whatever your potential investments are, or if you want to discuss your portfolio or discuss other things, we can do that with you. Feel free. This is a community thing, so nobody has to be shy here.
Yeah, just message the come up.
Yes.
On that June production schedule.
Pay attention though to XLY.
Consumer discretionary, y'all.
Pay attention to consumer discretionary because there's a lot of good stuff there. And so keep in mind, all this activity that you see here, this is all Amazon. But now that Amazon is like, Amazon was, or, sorry, I was in the wrong ticker. So this is all Amazon right here and what you see. So, but keep in mind, you got Home Depot and a few other players that are creeping up at the same time, and they're rebounding significantly just as well. So I would definitely pay attention to the consumer discretionary. There's a lot of good stuff coming out of here, and that's going to be like whoever's in that opportunity. I know that there's a trade out there for, I think it's like, for the 2022 calls. You can take a look at those if you're an options trader.
All right, well, you know what, I don't see any more questions, and it is about that time.
Yes, we went a little bit overboard, y'all. I apologize for some of the background noise. It was very flavorful in my house today. So, yeah, we'll definitely, I probably have to work on soundproof in my office, but hopefully I gave you guys some pretty good nuggets. Just to recap, I definitely like where the tech sector sits right now. It's still sitting there, still sitting pretty. I think XLC is going to be the sleeper ETF if you're looking to buy into that. AMD, I definitely believe that stock is going to go to 100. XLY, I see a lot of great things there. For those in whom which that like gold, I have no beef with gold. It's just not my thing. But if we're in the midst of recession, it's definitely where you want to get into for the short term. I don't like Zoom or Teladoc because they're only defensive stocks for stay at home, and as people go back to work, people will use less and less of it. And like I said, pay attention to that XLC because Google and Netflix, there's a lot of good things coming out of there, and I think that the best is yet to come.
All right, and there you have it. This was episode 7 of Trade Talk Tuesday.
Yes, and we're working on episodes for pre-record for our YouTube channel. So please go to our YouTube channel and subscribe there. There's no content, but we'll post the link there anyway.
Right.
But we'll post a link there because we'll try to put content there, and we're working on, like, be a little bit patient with us, guys. We are working on 5 different series. So that's like 5 different shows that we're working on to give you guys phenomenal content, and we want to make sure that it's the best of the best and nothing less than that.
Nothing less.
So, but be on the lookout for that. That should be coming up fairly soon. As you can probably see the video equipment, we're filming one of the segments here.
All right, that's it.
All right, y'all. Well, until next time, what you do, you put those 2 fingers in the air, split them and shake them. I'll see you guys on Thursday.
Thursday.
Bye.